Hey guys, welcome to another video in our training series from Stardynamic on US property. What I want to run through today is a couple of points. I get asked a lot when people are wanting to get into the market but don't quite have the funds available to do so. And conventional lending, as we would know it here in Australia or in New Zealand, for instance, is a lot more difficult as a foreign investor into a country. But that doesn't mean it's impossible. There are certainly options available to get funds. If you're needing to be able to get yourself started on your journey. Now, eventually what you'd be looking to do, of course, is to build up your capital enough so that you don't have to worry about lenders and don't have to worry about mortgages and so on and so forth. You can purchase the properties for cash. But to start with, we don't all have the ability to do that straight away. We may have your funds tied up here in a property or something for a period of time before you're able to invest, but you want to get yourself started. So there are a number of ways that you can actually look at getting some funding for your property journey. So what I want to do, I want to run through a few ideas, just thinking a little bit creatively and give you some options that you can look at when wanting to get into the market. So firstly, I guess one of the easy ways, I guess, if I can use the term easy, one option that a lot of people have, can you see the whiteboard here yet? One option, what we would have would be what we would call a joint venture. Now, a joint venture is where you would find a similar sort of investor who's also interested in getting into the market, who also may not have the funds, and between the two of you, or between two or three of you, or you might find a friend or a colleague, or you may know somebody who's also been thinking about getting into the market for some time, and you can pair up, pool your resources, go buy a property, do a flip, and then divide the profits. Certainly something you can do. One of the easier ways, generally you'd be doing that with someone maybe that you know, or someone that a colleague or an acquaintance, or you can even look out in property forums and things for other people who are interested in getting started. So a joint venture is certainly one way that you could do it. There's a number of things that a lot of people don't think about though when it comes to joint venture. And I guess, as we were saying, you know, you could have a friend, or you could have a relative or colleague that might be interested. But there are other options. So that's one way. But another way here could be what we call the property owner. So you may be looking at a property, you may be scouring some websites, or you may find a property that you think would make a really good deal. You could certainly do it up, and you could certainly sell the property and make some good profit. So you could contact the owner of the property who's selling it, especially if it's for sale by owner, and in the US that's quite popular. You could contact the owner and say, hey, look, I'm interested in your property, would love to get in, do a flip, get it on the market, looking at getting some funding. How about we do a deal? You could suggest to the owner, and that if they're bringing the property to the table, you could bring the funds to do the renovation, and then you can split the profit. The owner possibly gets they get their money, you get the deal, you get a percentage of the profit. The owner will probably get more for it in the end because of the split in the profit. So it's a win-win for all cases. So that's something that a lot of people don't think about. In the US, you certainly can do a deal like that. You could talk to the owner. The other person who you could actually do a joint venture with might be a contractor. So if you've got a contractor who's looking for work and they might be finding it hard to get work right now, you can turn around and say, look, I'll tell you what we'll do. I'll bring to the table a property. I'll go and buy, I've got a property that we're in the process of looking at the moment. You bring the materials and the labor, and between the two of us, once again, we can get a deal done, and you've got another option. So joint venture doesn't have to be necessarily another investor that you're looking for, or a friend or a family member or a colleague. It could be the owner of the property you're looking at, or it could be the contractor you're interested in using to actually do a profit. The advantage, of course, of using someone like the property owner or the contractor is it's going to be in their best interest to make sure that, the property owner, for instance, he wants to make sure that the property gets done up and sold, because he wants to get his money for his property as well as the profit. The contractor, it's going to be in their best interest to make sure they do a good job on the property for you, because of course now his profit is hinged to the deal working out. It's not just simply you're paying him per hour that he's working. So these are a couple of options that you can do. So joint ventures is certainly something you can look at. The other thing in the US, when you're purchasing properties, there is the opportunity to purchase on what they call a land contract. Now, this is very similar to what we would call here in Australia as vendor financing. A little bit different from, say, for instance, doing a joint venture with the property owner. This would be where you actually are buying the property, you have a contract to purchase the property on terms. So you might say to the owner, and even if the property doesn't say in the actual listing that a land contract is available, there is nothing wrong with asking, okay? They'll only say no, so you can move on until you find one that is. But you might find, especially if the property's been on the market for some time, the owner may be up for a land contract. They may be open to that idea. So this is where you would turn around and you'd say to the owner, hey, look, I'm really interested in your property. Not going to do, and the best way to do a land contract, don't try and get a discount on the property. Right? They'll have had dozens of people offering them less than list price on the property already that they've most likely knocked back. So by offering a discount isn't going to get you really anywhere. But you could turn around and say, okay, they've got it advertised for, say, $50,000. You could say, look, I'll pay you $50,000. We'll pay list price for the property. But what I want to do is put $20,000 down and we'll pay you off the rest over 12 months. Okay. Then what you're doing is you're getting into the property, you're getting access to the property, you've given them the $20,000 deposit. Then you get your rehab crew, renovation crew in, you renovate the property, you sell the property, and then you pay off the owner the remainder of his money. Okay. There may even be 5 or 6 or 10% interest on that over the couple of the months that you're doing the renovation. That's fine too. Even if you end up paying 55 over the period of the whole renovation, the project, you would just factor that into your feasibility study, make sure that there's still profit in there for you to do the job. And away you go. And that way you've got in and you've bought the property essentially for $20,000 down, not $50,000 down as you would normally have had to pay cash. So that's another option. So land contracts are certainly an option. I've certainly bought properties on land contract. You can sell properties on land contracts. You can get a little bit more for your properties by selling them on land contracts. So that's another option. So land contracts are a little bit different from doing a joint venture with the property owner. The joint venture, you need to make sure you've got all your documentation to cover yourself, your agreements. A land contract is actually a contract of sale with terms. Okay, so that's where it's a little different. Now, the third option you can certainly look at in the US, this is a huge market in the US, is what we call private equity. Now, you may have heard the term private equity before, or you may have heard the term hard money. Now, I'm not entirely certain where the term hard money comes from. In actual fact, to be honest with you, using some of the private equity companies or the hard money lenders, it's actually a little easier than it is the conventional lenders. The amount of paperwork and things that you need for the conventional lending can certainly be a little bit more complicated. So this gives you the opportunity to get in and get private equity. Now, private equity is certainly available for foreign investors. Now, you may have to go through a number of private equity lenders to find some. But I would suggest, I've seen generally 30 to 40% of private equity lenders will lend to foreign investors. There is a majority, 50 to 60 or 70% that won't, but there is that percentage that will. They're not looking for, they don't care what your income is. You don't have to have security. The security is on the property that you're purchasing. So private equity is another option that you can do, and you can get in and you can talk to a lender and you can say, look, they're often what they'll do. And I was only talking about this today. To one of our students. They get in, the private equity company will give them up to about 70 to 75% of the purchase of the property and 100% of the renovation costs. Okay, now there's some criteria. You've got to make sure that the property meets certain criteria, that the value of the property once finished is going to be over a certain level. Generally that $100,000 is regularly a boundary. So you need to make sure the property is worth a minimum of $100,000 when it's finished. They won't generally lend you more than the purchase price of the property all up. So there's a few little criteria you need to make sure you cover off with the lender. Make sure you know exactly the types of properties they lend on. Make sure you know the regions that they will lend in. Some won't lend in certain states, et cetera, et cetera. But you want to cover through that before you get started. But once you cover all that, tick all your boxes, then the private equity lenders are certainly a great option. They're higher on interest, right? A conventional finance, of course, will at the moment, particularly the way the interest rates are at the moment, you'll be looking at 2, 3, 4%, something like that. Private equity would be 7 or 8%, sometimes even for the renovation loans or construction funding, it's often known as, it might be up around 12%, but you only got it for a couple of months. It's only a loan that you'd have for 2, 3, 4 months, whatever the period of time it would take to actually renovate the property. You may be able to buy the property for cash and then get a 100% financing on the renovation, and that way you can buy the property for $40,000 or $50,000, but then get the renovation, your $20,000 or $30,000 renovation costs covered. So that way you're getting into the whole deal for only 40 or 50,000 instead of the 60 or 70 or 80 that you would have needed originally. You know, the property might be cheap. You might be able to pay 30 or 40,000 for it. Costing you 30 or 40 in the renovation, and get that covered. They may, on the other hand, as I said before, give you a percentage on the purchase price as well. So some will give you a percentage, some will give you sort of 70% of the purchase price, and then they'll fund the renovation costs for you. The renovation costs are often paid out in installments to the contractors. The private equity company will handle that. So that's just a couple of little things you can look at. So there's certainly some options that you can do rather than just conventional finance or physically having the funds if you don't have the funds. So, you know, if you're sort of struggling at the moment, you know that you need to get into the market. It's something you've really been wanting to do for some time. You're finding it difficult to get that last, you know, $20,000, $30,000 together to do so. Here's some options. You certainly can also borrow money against conventional lenders here in Australia or in New Zealand against property you may already have, and set up a line of credit, what they call a home equity line of credit or an equivalent. And then that way you can then use that funds to then invest in a property in the US, do your flips and get started. And that way you're only paying sort of 4, 5, 6%, whatever the line of credit costs would be here. So there's some other options there as well in your local states. There's certainly some other companies. I know there's some global mortgage companies you can use that will actually give you mortgages against properties in a number of different countries. So there's a few of those available as well. We have a number of those inside our inner circle, which you can, as referrals, you can refer to that certainly will lend you money against properties in the US and Australia and New Zealand and the UK and so on and so forth. So gives you some options. You know, if you don't have to be stuck for finance. You know, I was talking the other day at the moment with the way the market is at the moment, a lot of people are fear frozen. And really the only way to get around that is a mindset change. You need to change your mindset and understand that, you know, the best time to invest in real estate is always now. You know, whatever the market's going to be doing in the future, that's not the reason we're investing. We're not buying and hoping that the market's going to rise. We're actually building our own equity into these properties. But then even if you can get over the mindset of being fear frozen, you may find funding is an issue, and that's where you might be credit frozen. Now here's some options, and to change the credit freeze, what you need to do is upgrade your skill set, and that's literally by just learning and understanding how these options can work. All right, so I hope that was helpful. Certainly reach out to us if you want some more information on some options you can do. There's certainly options out there, so don't feel that you're stuck. Come and give us a yell. All right, see ya.